What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leverage Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and the notification bell. That way you're notified when we release our bonus content. Aside from the nightly and weekend content, we do release extra videos from time to time, so make sure you have that notification button hit. Make sure you follow us on X. We do tweet live updates as far as entries and exits for scalps and day trades, as long as mid and long-term trades as well. We also offer other information throughout the day that might help traders trade. Just a reminder, we're not financial advisors. We do not offer financial advice, but what we do offer is our view of SOXL's price action, not only in the current day and in the past, but where we believe price action will take us in the future based off of our charting method and trading method. That charting method and trading method is based in the strat. Excuse me. It's a very simple way of reading price action. If you're not familiar with the strat, hang with us through the video. You'll have a pretty good hang of it by the end of the video. And after the video, you can utilize some of the free information that we have in the description for this video, including this free PDF you can download, as well as the link to Rob Smith's YouTube page. Rob Smith is the inventor of the strat. He's no longer with us, but his YouTube page is still active, and it has a wealth of knowledge on there. And then, as always, do your own research to get further information. There's plenty of information on the internet about Rob and the strat. There's a big strat community as well, so you'll be surprised how quickly you run into other people that use the strat, and you can bounce things off of them. It's a great community to be a part of. It utilizes candles that can do only one of three things, right? Be a 1, a 2, or a 3. Based off of those numbers, there are reversal patterns, 6 main reversal patterns that we like to trade. We like to trade reversal patterns because they give you a clear entry and a very clear exit. You can trade continuation patterns as well. They do give very, very clear entries, but you do need to use your own judgment as far as where the price action will take you based off of major levels and broadening formations and other nuances to the charts that you develop with any other strategies that you might layer on top of the strat. So again, the strat, very simple to learn. By the end of the video, you should have a hang of it. Today's video will go like this. We'll have a quick recap of today's price action, and we'll zoom out real quick to look at things from the week, the month, the quarter, and the year. And then we'll zoom back in to set our 4-hour markers and our triggers and targets for tomorrow's price action. And we'll just do a quick review of the week, month, quarter, and year triggers and targets as well, just to make sure we have level set. Let's get to the chart here. So we have today's price action. I've just got it broke down on a 5-minute chart here. This is the end of yesterday's price. You can see we had that push up at the end. So we did open up down from where price action closed on Friday, which did also trigger the 4-hour trigger to the downside. If we go back to our notes, it was a 1, 2 up, 2 down. I won't go back to the notes. It was a 1, 2 up, 2 down that triggered. But if we take a look at our QQQ internals, we could see, of course, this upper left-hand corner is SOXL's price action. The lower left is vol QD, which is basically money in versus money out. The bottom right is ADQD, which is breadth for the QQQs. And then we have the tick over here, which just shows how many ticks going up versus ticks going down in QQQ. So we can see we had that flash down, quick flat push down in volume, vol QD, which is the money, basically money flowing out, but it was very quick. It was then, bounced back above the 0 line and pushed up. Breadth opened up negative, but it didn't even really have a push down. It just immediately pushed up. Same with the tick. So you can see here in price action, we did get the push up. The rejection off of the 4-hour trigger to the downside. If you wanted to put a little bit of risk on the table, you could have entered puts off of this lower high. Right, so here was the high from yesterday's price action. We had the lower low, came up, made a lower high, and pushed back down. Right, so you could have entered puts. The entry was below the opening print, but we like to see the actual lower high be set underneath the opening print. So we personally did not enter puts. Again, follow us on X, and you can see our entries and exits. but we did not enter puts on this 2 down, triggering the lower high. We decided to wait because we have the previous low a day, overnight low, and opening print all basically at one level, not to mention the week flip, which basically the first 5-minute candle wicked off of. So this is looking like pretty good support at that time. So we're looking for higher lows above opening print, and staying on the 5-minute to make sure we can get a good location entry, but keeping our eyes on the 15-minute and the hour and the 4-hour, seeing if the 5-minute reversal pattern would trigger something, if reaching magnitude of that 5-minute reversal would trigger something on the 15, which then could trigger something on the hour, and so on, right? So we did get the lower high here above opening print. We entered calls. From that point, no, we don't buy calls that are expire the same week. Gives us a little bit more flexibility. An individual contract would not, obviously offer us as much profit as an individual contract for the same week, but we buy multiple contracts so that we can get that dollar profit off of the less percent price move. And we buy at the money and in the money. So we bought calls here. From there, we flipped to the 15-minute. Because again, we plan on staying in, even if it's a scalp, longer than 15 minutes. We want to look at where we're at on the 15. So when we got the lower high, it was up a little bit right in here. We could see that was following a higher low. So we're trying to start an uptrend at that point, and so we basically just rode the calls because we got the push down here on the 15-minute, but again, that just set a higher low. Rode those up to the year flip, which also coincided with the 4-hour trigger to the upside and the overnight high. So although we did wick above that and basically trigger a 3 on the 4-hour, a green 3 or a bullish engulfing candle, we do know that the year flip has been a major rejection point for 6-7 weeks now. So we did scale out at that point. We did leave some runners, but then once we got the lower low on the 15-minute, we did exit the rest of our runners. So didn't get quite as much profit on the runners as we did the initial scale out that we had in that position, but still made profit because again, we entered down here. We were looking for the bullish engulfer on the day, back here. Hopefully, getting that would have pushed us, gave us momentum to push possibly through the last week's high, and then start going attack, things up here. At that point, setting if we would have broke last week's high, that would have made this week a 2 up after a 2 down last week. So the 2 down last week was a higher low, and we'll look at this on the week chart here in a second. But if we would have broke through that, that would have set a higher low in the week, possibly giving us more bullish momentum to continue to the upside. But that year flip continues to be, a pain in the side of bulls, right? Not letting us get to full time frame continuity to the upside. Let's go back to our chart. Let's actually zoom out and look at the day chart. Right, so we did end up having a bullish engulfer on the day. It didn't happen until the end of the day, but you can see here, if you're not familiar with this channel, 2813, that's the year flip. That's what would flip the year green. Right now the year is currently red. That's been resistance multiple times over the last 6-7 weeks, right? So now we did end up closing above it. So if we look to the upper left hand part of the chart, we are now in full time frame continuity to the upside. The day, the week, the month, the quarter, and the year are all green. So that gives the bulls a little bit more momentum here. We can start trying to go attack the higher high on the day, which also coincides with the market maker's expected move for the top of the market maker's expected move for the week. And of course, if we do poke through that, we will encounter this weekly broadening formation. Again, if you're not familiar with this channel, check out our precision trading and charting and the bonus content on our YouTube page. That'll let you know what these lines mean. For right now, as you can see, there's not a whole lot of lines that come into play a whole lot of indicators really overall on the chart when you're using the strat, right? It's a very simple way to read price action. We do have this monthly downtrend line right here, this green dash line that we have been kind of contending with for a few weeks. getting above it, pulling back below it, getting above it, pulling back below it. It looks like we're finally defeating it, right? That wick, we didn't get any closes below it in this recent pull down, right? We just wicked below it and we're pushing back above. So it looks like we can start to leave the monthly downtrend line in our rear view mirror, and just focus on attacking this year flip again, right? We don't just want to get today's close above it. We want to get more price acceptance above it, get a higher low above it or on it, and then continue to push up to continue an uptrend, not only on the day but on the week perspective. And then, of course, that rolls into the month, the quarter, and the year, which, again, now we're in full time frame continuity to the upside. So that would give us a lot of momentum, maybe going to push up to these 34, 36s. I don't know that, even by the end of the year, we will be attacking this gap up here by 40, but it's possible. So, no, even though today was a bullish engulfing candle, again, we're still stuck at the top of this range that we've been in for 9 weeks now. The range did expand a little bit over the past couple of weeks up to this more 30 and 23.50 level from the 24 and 28 levels that we were dealing with. But, we're here at the top of the range. So we had the push down and the push back up. Bullish engulfing candle, a green bullish engulfing candle, it leans bullish, but it still technically is indecision, right? It's an indicator of indecision, right? We had price action below yesterday's low and above yesterday's high. And technically, let's see, yesterday's high was 28.22 and we closed at 28.18. So technically we closed within yesterday's price action. So it is bullish leaning, but it's also indecision. We can see the one combo 2 up, 2 down is still on the board. And that the target for that would be the low of the candle to the left of the one. That's 25.34. So, we also have to take into account NVIDIA had earnings after hours today. And I guess it was more, a nothing burger. It's got the market down a bit. NVIDIA is down like 3%, but it's not crazy down, right? It's not tanking the market. There's still a lot of overnight trading to be done and pre-market trading to be done. So who knows what will end up in the morning. I don't want to dive too deep into that because we could be down right now and we could be up 3% tomorrow morning when we wake up or right before the market opens. So don't want to try and guess too much at where we'll be tomorrow, but it just goes to show that we do have both sides in play, right? The bearish side and the bullish side. This is where we've been able to, once we see the reversal at the top of the range, buy puts for, like a month or two out, ride it down and exit once we get to the bottom of the range, wait for a reversal trigger, and buy calls to get back to the top of the range. So we're still kind of in limbo right now. Also, if we do get the push to the downside, let's see, this is Wednesday, Tuesday, Monday. So Monday opened right here. If we get the push to the downside, right, if we go 2 down tomorrow, that flips the week red. So then, right, the year and the week are red. That puts time frame continuity into contention, right? There's some red, some green. And then if we get a real push down, possibly even below, the original range, back down into the extended range that we've got here, we do run the risk of flipping the quarter and the month red, which then we go from full time frame continuity to the upside. We go to full time frame continuity to the downside. So SOXL is still at like a tipping point right now. It's the rest of the market, SPY making new highs, the Dow making new highs, QQQ lagging behind, but SOXL chips as a whole, they're kind of at a tipping point right now. We can go either way, and once the decision is decided, it will be decided probably with some pretty big momentum, because again, we're going to be flipping into full time frame continuity in whichever direction we go. So I wish I could tell you, go buy longs for November, December right now, and you'll be fine. But we don't know exactly where we're going to go. We're just moving sideways. Again, even if we get the push up to this 30 area and then maybe even reject and start coming back down, we're just expanding the range. It's still sideways movement. Yes, you can get, you're getting bigger range on the swings that you can pull off. So it's nice from that perspective, but you just have to make sure you're playing the edges and ready for any, look above and fails, look below and fails. Anything that shows a reversal, it gives you a little bit more range to trade for, but aside from that, it's still just sideways action. So it's nothing that you're going to go buy long dated expiration contracts right now for, you know. So let's look at the week, because again, like I was talking about, we are close to setting a higher low on the week. If we can shrug off this downward movement in overnight action, overnight trading, then and push back up and you know, go 2 up on the week, break last week's high. We're setting this as a higher low, and we're targeting the previous week's high, which is 29.66. Again, coinciding with the top of the market maker's expected move. But again, even if we do break through that, because it's not an end-all be-all, that doesn't mean price action has to stop there. It's just where it's expected to stop. If we do get the push through, we do still have to contend with this weekly broadening formation. So, you know, we got to keep, you know, tempered expectations at this point. We've still got gaps to the downside. On the year, we didn't fulfill the strat totally. You know, just take a look at the month real quick, because we did go bullish engulfing candle on the month. We were hanging above last month's high, but we've pulled into last month's high. Into last month's trading action. So again, just another signal of indecision. We went below, we went above, and we're back within last month's trading. So still just more indication of sideways action. If we look at things from the quarter, they do look a little bit better from the quarter. We do still have the 2 down, 2 up in force. It's in force because current price is above last quarter's price. So we're in that 2 down, 2 up. We're targeting the high of the 2 to the left of the 2 down, which is this 36.15. Not to say that we would get there this quarter, because we triggered the 2 up this quarter. It may take multiple months to get there, but that is the target, right? We have very clear entry and very clear exit. So if you are wanting to trade longer dated contracts, if you want to buy, you know, June 26, I don't even think they have the June 26s out yet. That's been frustrating me, because for a couple months now, I've been wanting to buy some June 26s. But now that we're getting into, again, another thing that we got to think about is seasonality. September, October are seasonably the worst performing months for tech. You know, now you don't want to necessarily go with those June 26 contracts. Maybe if it was, you know, a month or two ago when I was trying to get them and price action was still kind of pushing up, that would have been different. But if you did want to get like some, once they're available, June 26s, or if you want to just go January 27s, you could get them right now and just have a stop at the last quarter's high, right? Because then you would no longer be in force on the 2 down, 2 up, and just be looking for that the high of this candle. Not necessarily suggesting that right now, but it's something you can do. Again, the year has been the contention for us. We have just flipped back green. So you can barely see this candle here, this doji green, but we did trigger the 1, 2 up, 2 down. It almost reached magnitude, right? The magnitude is the low of the candle to the left of the 1, so that's our $6.21. We made it to $7.23. So it did not fulfill the strat. So you never know. If we flip back red, get a push down, and we get full time frame continuity to the downside, flipping the month and the quarter red as well, we could get that push back down to try and fulfill this strat to this 621. Don't think that's going to happen. Not saying it's going to happen, but it's something you have to keep in mind from a long-term perspective. So again, from the day, we talked about how it was a good day. From a standpoint of, we got a bullish engulfing candle, so it does lean bullish, but we are at the top of that range. So now that we've zoomed out and zoomed, let's zoom back in. Let's set our triggers and targets for tomorrow. We've got our 4-hour markers. We've already moved these for you, so we don't have to waste any time moving them during the video. But we can see the 4-hour trigger to the downside would trigger at $27.77. So if price action opens up tomorrow either below 27.77 or pushes below 27.77, that triggers the 3, 2 up, 2 down. Very clear entry at the trigger. Exit is the low of the 3. So previous low of day, 27.28. So it's about 50 cents of price action that you've got there if you get it from trigger to target. You do have the weak flip here that was support today, and was this 2 days ago? Friday, it was a little bit of support. So you do have to watch out for that when trying to reach magnitude here. And then again, we'll see where the overnight low takes us. It could be down even further, but if you do reach previous low day, of course, the next target on deck is going to be the overnight low. And then we're looking at last week's 50%, which is this 25.99. That is a pretty big dip to take. So you can look to the left and see this low here, 2681, as another extended target on the 4-hour. And the reason why I bring that up is because it does come into play on the day chart, which we'll see here in a second. Also, if we do go to the downside and we go below today's low, that puts back in force this one combo 2 up, combo 2 down, and the magnitude for that, of course, is the low of the candle to the left of the one, which is again this 2681. So 2788, 27 flat, and 2681 are going to be our targets to the downside from the 4-hour perspective. If we're looking, let's go to our notes here and just show how we've got this all marked up. So these are our notes for tomorrow, August 28th. 84 trading days left in the year tomorrow. Today's closing price was 28.18, so that means we are green on the week, we're green on the month, green on the quarter, and we are now green on the year. Right, so the year flips red at 28.13, quarter at 24.38, the month at 23.57, and the week at 27.35. We know what our market maker's expected move is. Again, if you're not familiar with this, check out our weekend video and where we show how you can get that information and how we plot it on the chart. So we do know we have a range here of 29.97 to 24.93 as the expected range by the market makers. And then, of course, we have our gaps above and gaps below. That way we can just quickly reference them in our notes. But again, to the downside on the 4-hour, if it triggers to the downside, it's triggering a 3-2 up, 2 down. It triggers at 27.77. Magnitude is 27.28. Extended targets 26.81 and 25.99. So to the upside, we would not have a reversal. Again, reversals have a trigger and a magnitude, which is basically your target. And then it has extended targets. A continuation just has a trigger and extended targets, right? It doesn't have a clear exit. So you have to use your judgment. And so when we look at this on the 4-hour, we would have a 2 up, 2 up. Our first target that we're mapping out here is 28.32 because although it's not that far above where we're currently at and where the trigger would be, that is a major level. I don't want to say major level, but it's a level that is going to be fought over by the bears and bulls, right? So it could be won by the bulls, it could be lost by the bulls, and we pull back down. But it is a level that we have to make sure we know about. So that's our first target. Let's go ahead and bring up our fibs, right? This 28.50 is last month's high. So once again, it's going to be a level that comes into play. You can see how we got above it, came back down below, fought back above it, and then pushed back down below. So, and then resistance. So we know it's a level that's going to bring some contention as well. So from a 4-hour perspective, that's going to be our second target, 28.50, and then 28.71. If we go ahead and we'll just pull this out real quick. If we go to the 15-minute and we go to Friday, and we draw a Fibonacci from this is the candle where Powell spoke, right? So if we draw this, we can see that we have a Fibonacci extension here of 28.74. So that's our first target is 28.32, second target is 28.50, third target is going to be this 28.74. Why do we have 28.71? What does that draw in? Oops, that's not what I wanted to do. I must have just mistyped then. Yeah, 28.74 is going to be our target. Right, that's our Fibonacci extension. So again, the 4-hour, we don't like to put too many extended targets on there because they do roll into the day. So if we look at the day, the magnitude for the day, the 4-hour flip is 27.28, which then triggers the continuation pattern on the day. So the reversal 3-2 down, 2 up. 3-2 up, 2 down on the 4-hour, then triggers the 3-2 down continuation on the day. So if we look at things from the day perspective, let's get rid of this fib extension. And so if we go 3-2 down, that technically would trigger the one combo 2 up, 2 down, which would give us a target of the low of the candle to the left of the one. But just to start out, it would give us the first target we're going to want to look at is the low of this one. Just because this target down here is so far down. Now, if we open up down here, then, okay, full speed ahead. Let's gun for this target. But initially, because there could be some chop in the morning, just depending on where things open up, we want to use this as our first target, and that's that 2681. So we got 2681 as our first target, and then again, because this triggers the one combo 2 up 2 down, the magnitude for that is this 2534. We've got that as an extended target here. 2599. What do we have? 2599. Don't remember. Oh, that's why. If we bring up our fibs for the month, the 50% of last week is 2599. So we've got the last quarter's high is 2584. Last week's 50% is 2599, and last month's 50% of 2604. That can be a big area of support before we reach the bottom of this candle. So that's why we stuck the 2599 in here as a target before we reach the 2534. To the upside, we would have a 3-2 up continuation triggering at the high of today, the 2823. So again, we're bringing in this 2850. No, we'll just we started with the 2870. Again, we fat fingered that. It's 2874. That's the fib extension that we had there, and then that's the 1.38 fib extension. The 1.618 extension is 2920, and then 2966 is the high of this candle. So basically the higher high on the day. That's what we'd be shooting for next. So again, it's a continuation pattern. It's not a reversal pattern. So not the clearest exit. Very clear entry, obviously high of day. But you've got to use your judgment, right? You can also bring this candle into play, this 2871. That might have been why we had the 2871 on there, but that comes into play with the fib extension of 2874. So that area is, obviously going to be a little bit of resistance. If we break through that, then we're gunning for the higher high in the day, which kind of coincides with this 4-hour broadening, the top of the market maker's expected move as well. So pretty clear on where triggers and targets are. Only have reversals to the downside on the 4-hour. Everything else is continuation on the 4-hour and day. When we look at the week, we still have the possibility of triggering the 1-2 up 2 down. We're pretty far away from that though. The trigger is 2366. We're currently at 2818. Again, we'll see what happens with tomorrow's price action after everybody reacts to NVIDIA's earnings and guidance. But it'll be pretty hard to trigger that. I'm looking more for us to trigger the 2 up or just remain an inside candle or a 1 for the week. If we do trigger the 2 down 2 up at 2832, we're looking for a magnitude of 2966, which again comes into play at this higher high on the day perspective. So after that, if we do get to that 2966, if you're familiar with this channel, this 3055 level should be ingrained in your brain as well. If we bring up the major fibs from the 2020 low to the all-time high, let's just bring this up here. So if we're looking at the 2020 low to the all-time high, we draw the Fibonacci's in here. The 61.8 is the 3055, and you can see that it was resistance here, right? Only able to wick through it, whip through it, and pulled back down. Wick through it here, so it was a support here. Wick down to it, support there, a little bit of resistance there, but then resistance here, a little bit of support for 3 months before it finally broke through. Support here for a couple of months as well. So this 61.8 fib, this 3055, is a very solid level. It's a level that we want to keep in mind. So again, if you're familiar with the channel, that level is ingrained in your brain. And then we have our extended targets as well. I won't go to the charts for the month and quarter and year, but you do see that we've had these out here for a while. We initially triggered the 2 down on the month, but it pushed back up to trigger the green 3. So these are underlined just to show that they've both been triggered. The quarter is in a 2 down, 2 up. It's in bold and underlined because it not only triggered, which is the underline, but it's in force right now, so that's why it's bold. So we're still in force on the 2 up, 2 down. And then again on the year, we triggered the 1, 2 up, 2 down. We did reach our initial target that we had before the actual magnitude. So I'll actually take that off of there. We don't need it. So we still haven't reached magnitude on that. So just keep that in mind. I don't know that we'll go see that level again. But if we do, it is on the board. We do have that as a target, and we'll be ready for it if it doesn't want to pull back that far. But yeah, that kind of does it for the video. Most people are here for the triggers and targets, so I hope I've explained those clear enough. If I've gone through them too fast, hopefully hit rewind and slow it down a little bit, or just leave me a comment in the comment section and let me know I need to slow down or I need to explain something more. Again, the precision trading video in our bonus content section will come in real handy for you as far as setting the triggers and targets. That shows how why we set the 4-hour markers, where we set them, and then it explains the triggers and targets that we go through. So I encourage you all to go watch the precision trading video in our bonus content section of our YouTube page if you have not seen it already. I hope everybody's enjoyed this video. If you did, give it a thumbs up. It really helps the channel spread. As you can see, we're not selling anything. Anything that we're giving away out here is free. We just want to spread the word about the strat, for one, as a trading and charting method. Then kind of want to promote the little twist that we put on it with the 4-hour markers that we use for the intraday trading. But most importantly, we want to spread the word about SOXL. By no means is it a new ETF. It's been out there for years. And a lot of people do know about it, but there are a lot of people out there that don't know about it. And frankly, the more people that trade it, the more liquid it becomes, and it's even better for everybody who trades it. But I've always said, pound for pound, it's probably the best ticker to trade from an options perspective. You have a very high beta ETF, depending on where you do your research. SOXL as an ETF, it has a beta of 4 to 5. It has a very low entry. As far as the premium is concerned, when you take into account the high delta to low theta that you get, especially when buying at the money and in the money. It's something with a very low entry price point, but still gives you a very high reward with a relatively low risk, right? So the low risk is the small amount of money that you need to put in there, and then if using a repeatable strategy, a strategy you can repeatably use confidently, then there's not a lot of risk on the board, and it's something that we have used for years now to basically give us consistent profit throughout the week, another stream of income. So kind of something that we can hang our hat on, kind of a crutch that if we need to go make some money, we know we can go to SOXL to have a good chance of making a good amount of profit. So just want to spread the word, make everybody aware of that. So hit the like button. It'll help the channel grow. And I'll continue to provide as much free content as I can in the best way that I can. If you have any suggestions, throw them in the comment section for me. But again, go ahead and hit that like button and join us tomorrow night when we set up our triggers and targets. And also, we will go over the market maker's expected move for Friday. So don't miss out on tomorrow's video. I hope everybody gets some good rest tonight. That way they are refreshed for tomorrow's trading. And I wish everyone good luck in tomorrow's trading.